Yo.
Hello and welcome to another edition of Live with Strazza. I'm your host, Steve Strazza. We're going to talk about these markets, right, Spencer?
That's the plan. Do we have charts? I hear we do.
So you're sell the rip now? That's who you are, huh?
Tomorrow I'll be someone else.
You know, we didn't get to talk about the Yukon Lady Huskies winning it all this year.
Shout out.
How about Florida, too?
It's a great game. It was a great game for sure.
Did you watch the Knicks game last night? Basketball's been good.
But I heard about it though. All right, it is 9:50 a.m. on the East Coast. How have things transpired in the last 20 or so minutes?
Let's just start where we were yesterday, right? For example, I keep getting my days mixed up, man. That's what happens when I go to the beach. Yeah. Let's start with some of the stuff that we talked about Monday, right? Some things that were looking good last we talked. Rocket Mortgage slammed, right? We said we're gonna wait. We need a green candle. We got to close up here around 15 3/4. I think we called it. Never happened. Some other things we thought about maybe liking. Home builders. We said, wow, what a scoop this could be. What a nice scoop and score. We drew this divergence, right? This potential bullish momentum divergence. And we said, be careful. We say potential for a reason. Need price to confirm it. Instead, momentum caught lower to price, right? And is now confirming this top as a valid top. You zoom out, you see how pretty it is, right? You don't want to draw these things any differently than this. Why wouldn't home builders, one of the early cycle leaders, follow something like, I don't know, semiconductors, which completed a very similar top just a week or two prior. Another group that we talked about maybe liking over the past few days, Vietnam. That was interesting. The way I'm thinking about this is if we're really going to go that hard on China, and China does not want to play ball at all with 84% tariffs, give me a break. China will lose. What other countries will win in that case? I got my eyes on things like Vietnam, Thailand, the Philippines. Right? I've been slowly dipping my toes in. I haven't taken myself out of Vietnam yet. I'm down big, but that's kind of what you have to do in this market. If you're going to just step in and buy these things, you have to be open to maybe some more downside before you finally get that final low in that spring. This is Thailand. When you zoom way out, this is the MSCI Thailand ETF, THD. Man, this thing looks just like Baidu when you zoom out enough. It's a massive decade and a half long top. Pull up the RSI here. We are getting oversold on the weekly. Don't love that. But man, if this thing were to fire higher, get back into the 50s, I think you want to be long all day. Stories like this. Philippines is another one I think is really interesting. You have, get rid of that. You do have a shelf of lows here, right, that you kind of lean into in the 23 range. Okay, I like that. In terms of the broader market and do we bottom? Here's what's interesting about today, right? China's at the forefront and probably will be. We look at the daily action in FXI, we're up 4% here. So they just announced what, like 84% tariffs? Do I have that right, Spencer?
Yep, that's right.
And China's bouncing on the news. The market wants something to be happy about. The market's ready to bounce. It wants it. It needs some sort of positive news. That's what it keeps telling us, right? Monday, got so excited. 7% intraday rally on a rumored headline, right? Had to give it all back. Yesterday, we just opened higher like we were just hoping for a headline to come during the session. And then slowly, as one just didn't come throughout the day and more rumors were dismissed, right? You saw the market just drip lower. The market wants to bounce. It's ready. We are so extreme oversold right now, just across the board. Now, internationally as well. I don't think it happens. I don't think it materializes. I don't even think you get a dead cat bounce without some sort of positive news or rumor of positive news that's actually like a more valid rumor than the ones that we had earlier this week. I think that has to come. The market keeps telling you that day in and day out. So at this point, I think you make your list, right? I think there's a lot of things that appear interesting here. I don't think you want to run to the defensives. I'm interested in some of the blue chip gold miners here. I think there's a catch-up trade in something like a Newmont Mining or Barrick Gold. Barrick Gold always changing their ticker out here. So they're GOLD now, right? These are buy on strength setups though at this point. Something like silver, I want to see that damage repaired, right? If I'm going to get super bullish on gold miners again, I think silver needs to get back above this VWAP. So there's a lot of stuff we could look to. I think healthcare remains interesting in certain areas, particularly. We have medical devices that you could play off of these pivot lows here. So that's IHI around 54. We have so many logical levels. However, I think there's one big logical level that's worth following far more than the rest. And I have I have a feeling that this doesn't end and we don't get that tradable low in big spring until maybe we revisit the lows of earlier this week, but not the lows in the index here. This is SPY. I'm talking about the futures lows. So this is ES1. When you zoom out, S&P 500 futures, you look back to Monday's candle. Look at this, Spencer. We came all the way down, almost 4,800. And where is that? I got this big green line drawn at the prior cycle highs. And what did Brian Shannon say today when he was on? He said, anchor that VWAP, right? Which we have been doing because we are some true students or disciples.
VWAPians, if you will.
Of Shannon. Yeah, we are VWAPians. So we had this here, and we saw how it kind of put a cap in the selling back in January 23, and again in March 2023, then again in October 2023. We're back there. And now it's also the prior cycle highs, and Brian also pointed out, look, it's kind of like a little area here. Drop a VWAP at the prior cycle highs, and that's going to come in down by 46. Right, so I think this little range here, that's where the spring kind of comes in. Maybe one more big blast today, check back into that level, and then we go. I think that makes a lot of sense. That's what I'm watching. And then I'm going to go and I'm going to look at things like, okay, is ITB hooking now higher, repairing some of this damage? Is what we just talked about? Our medical devices digging in at these lows and bouncing, right? Something like, talking about Thailand here. Okay, can Thailand get back above, get back into the 50s in that environment, right? But I think U.S. equities at this point, since this is the U.S. equities are like ground zero for this whole kind of volatile environment that we're in. I think you want to see them stabilize. Until the U.S. market stabilizes, God knows what happens around the world. Right?
And then and to be clear, like it's ground zero, but you're not you wouldn't buy the S&P futures or the SPY or whatever in this scenario. You're looking for that as the signal or the cue to then say, okay, maybe I want to dip my toes in the water here, and here. But you're not saying I'm buying SPY at whatever it was, 46 or whatever the hell. Or
I'm never going to buy the SPY as a vehicle. However, I'll put on SPY-like trades. Look, I've been adding to stuff in my longer-term account. I bought some NVIDIA the other day. NVIDIA at this 100 level, if it holds these lows from August, like that's a stock I want to own more of, right? So that's something I would consider like a SPY trade. So I am dipping into U.S. growth. I've had friends and family reach out recently and interested in buying the dip. Good for them.
Yep,
so I said names like Google, right? If you could find a level here, right? Look at Google all day. These are stocks, Spencer. Here's the thing. We probably already own a good amount of these Mag 7 names in our long-term accounts because we do this. But these are the stocks that a lot of people for years and years and years, cycle after cycle, feel like they missed. So when you get a big give back in some of the best companies in the world, I think they are worth buying for a lot of people. If you have a long enough time frame, Google at 150, NVIDIA at 100, dude, Microsoft fails this top and rips higher all day. Microsoft back into the 380s, love that, right? But there's damage to be repaired. Something like Vago, Broadcom, I mean, you got to get back above the shelf of old highs, call it 180. So some of them are a bit further away from some of the others in terms of actionability. So I think you got to just treat each chart individually, right? And on its own merit. And really, I like the buy on strength setups more than I like, just buy into this support level, right? So something, for example, like Microsoft, where I can say to myself, okay, Microsoft's going to have a couple green days before I get involved, undo this little top, get back into the 380s, really prove itself. I like that more than saying something like, okay, Google, let's just buy it against these pivot lows. No, watch the pivot lows, see if they break. A lot of times they will. You'll get a little shake move below a key level, and then buy the recovery. Buy green in these environments. Right? Don't buy a red candle into support. Buy the green candle that reclaims and blasts back through the support from below. Feel me?
My question is, if you had a long enough time horizon, a long enough position, whether retirement account or whatever, would you also let time be your guide as well as price? You know what I mean? Like, would you also say to yourself, all right, I've got a position. I'm trying to buy dips in the old retirement account in NVIDIA. I'm just going to say, hey, every 2, 3, 4 weeks, buying more, right?
I think that's okay. I do think, however, and look, when you say it's going to be a bear market for the broader index, sometimes stocks buck the trend, right? So can you pick the ones that are going to do that this time around? You can. Is it a game that I try to play? No. So I'll start buying at logical levels, but I'm saying to myself as I'm buying this stuff, as I'm buying a couple shares, I'm talking about like just a little bit at a time, bought like 2, 3 shares of NVIDIA, right? The other day, I feel like I'm doing something, more than anything. But when I look out long enough, right? I'm not saying to myself when I do that 6 months from now, I know I'm going to be good. But I am saying 2, 3, 4 years from now, I'll probably be really glad that I bought NVIDIA at 100, right? These aren't things that I'm looking at and saying, oh, I'm going to make money in 3 months. I don't know. I think this takes a long time at this point, particularly for U.S. growth. I think it's a brand new bear market. I think you want to look at, the topping patterns from today in a similar manner as we looked at these topping patterns here from the end of the last cycle, right? So we had that top, and then we had a couple of different rally attempts, but it took months to get out of there, to quarters, right, to get out of there. So now we have another top here in the S&P 500. Looks damn similar, doesn't it, Spencer, to the one from back in 2021? Here, let's just draw them out.
Yeah,
I would expect the same. I was talking to Brian today. I'm sure you heard about how the COVID bottom was unique in the sense that it was so fast, right? Don't expect this. This was COVID. Even 2018, dude, was kind of like a V. Right back here. So I think those were bad lessons. This is a much more normal bottom. Takes time, right? Got a bunch of fits and false starts, shakeout moves. You're getting whipsawed around, choppy. You would say that we're trading in a range, right? You go back, oh, it's a messy market, sideways, consolidation. Then you look back after a couple quarters, you have this nice big base that acts as a launch pad for a brand new bull market, brand new uptrend, brand new markup phase. So start drawing your charts like this, right? So we're going to hang out down here. This is probably going to require some basing. Do we end up drawing it more like that, right? Or like this? Feel me, Spencer? In other words, a little bit of this and then a little bit of that. A little boom, boom. Like this? Chart art.
Why are you going? Just never mind. Okay.
You're gonna get chop. Is my point.
Yeah.
Right. And then eventually you're gonna get a boom, boom, and it's go time, and you'll see some big momentum and some initiation thrusts and risk appetite ratios will look better. That's talking about buying crypto and the opportunities there, and international equities will be back on trend, and everything will be fine. We'll say, remember that tariff tantrum?
That would be a technical breakout when that happens.
Would it be technical, Spencer?
I'm half asking, half telling. I don't even know.
The way that the mainstream media uses the word technical.
Because you're right. Because if this happened in 8 months from now, there may not be a reason, right? So yes, it would be technical.
I'll tell you though, 8 months from now, I think you have far better odds of there being a good reason. This doesn't last forever. Okay, this is absolutely, this is downright destructive to the global economy. It won't last. It's nobody's idea is to make this last. It's to make a deal. How long those deals take, what they look like, right? How much negotiating back and forth and 84% bullshit tariff announcements do we have to go through before we get there? But just pay attention to how much the market believes this trash. China announces an 84%, and the market's like, no, you're up today because that's absolute crap. That ain't happening. You get what I'm saying? The stuff that's being said this morning, oh God, gray hair. Besant on whatever, talking to Fox Business News. They ask him an absolutely ridiculous question because it's just crazy town. Scott, are you going to delist Chinese equities? Maybe it's on the table. It couldn't be any further from on the table. They're not going to delist those. You know how I know they're not going to delist Chinese equities? Go look at MSCI stock today. Okay. Thing would be down 40%. It's flat. Go look at S&P Global. Do you know the big financial companies, big US-based financial companies that made a massive bet on China a decade ago? They're entrenched. They're in. There's nothing they could do. They can't get out. It would end businesses here in America.
Everything is on the table, and also nothing is on the table, right? Nothing means anything.
Because somebody on Twitter today was like, oh, he might know more than you. He definitely knows more than me. But that doesn't mean he's going to come on there on Fox Business and tell you the truth.
Yeah.
So just be careful. You know, the headlines, you have to pay attention to them, but you also have to think about them, right? Just don't take them at face value. There's a lot of cyberbullying and a lot of bullshit being spewed. This is how negotiations happen. It's called the art of the deal, Spencer. I've heard Donald Trump, he's been through this before. So look, I'm rooting for him. I think all Americans have to. And I also think, just to put a positive spin on this, okay, because you hear all these crazy things, people get really anxious in these environments. Everybody's losing money. It's tough out here. Okay. You hear the scary headlines. Here's a not so scary one. Maybe this all works out and we reach some far fairer trade deal that can end up really helping, in getting us out of this national debt situation that we're in. Right. And maybe the rest of the world comes to the table and America does finally get a better deal. Maybe we're less reliant on China. Maybe we're less reliant just on the rest of the world in general. Whatever it is, can we look back, I don't know, 2 quarters, 6 months from now and say, wow, that was great, right? A little short-term pain for some long-term pleasure. America's back in a better place. And I think certainty around China and America is so important. For so long now, right? It's always been this story of, but look out for China, right? And America and China have really been at war in an economic sense for a decade. And I think that's putting a serious cap on the valuations of Chinese equities. I think Chinese equities are discounted right now 30, 40, 50% because they're an enemy of America. If you can get that out of the way, right? And China and America make a deal where the market can look at it and say, that's fair. Both countries will be happy, probably happy for a long time, right? Won't be at each other's throats anymore. Maybe more business can get done. Better things can happen. I think Chinese equities get absolutely re-rated in that environment. I think that's what the market's telling you today. The market's not worried about 84% tariffs being imposed on the U.S. out of China today. The market's putting China up. So,
the situation that you're saying doesn't just apply to China; it applies to everybody, right?
China's the big one. China's the big one.
Yes, but it applies. But that event, that some sort of kumbaya thing that you're talking about, that would have huge ramifications for every asset under the sun, right? So if it were to happen, we don't know. But okay,
Spencer, you might see a re-rating just internationally in general. Yep. Maybe right now, international equities, the reason they trade at these dumpster multiples is because things aren't good and there is uncertainty around the global trade situation. Maybe the market sniffed this out, that the U.S. wasn't okay with the way that things are right now. And maybe once you get to a place where there is more certainty and the U.S. is happier with its trade deals around the world, then the market could be happier that it has some certainty there that those trade deals can exist for a while. You get what I'm saying? The market's very smart. The market could have sniffed out something even like this, right? That the U.S. was going to bring them all to the table and try to renegotiate something. I think you can see a huge valuation premium tacked on to the absolute dumpster multiples that they have now in a world where everybody's happy, but particularly the U.S. is happy because we're the ones who are going to shake things up like this.
It would be ironic if after 10 years of the U.S. just crushing everybody in terms of markets and multiples, valuations, whatever, if the roles were flipped and multiples expand overseas in Europe and they contract in the U.S. and we complain about that too, right? It's like you're damned if you do, damned if you don't. But
and I'm not saying that the market is not worried.
I was quite proud of American valuations, frankly.
As we should be. What do they call it? American exceptionalism?
Yeah.
All these like phrases for it now.
Yeah, we just crushed everybody for 15 years. It was awesome.
Here, you want to talk about international stocks? Let me give you one. Here's one for the road. Look at EFA. This is your S&P 500 of I guess ROW, rest of world. So you hold this level in the EFA 74, 75, you get a nice little hook higher here. Oh, most oversold momentum reading, man, we blasted below 20. That's the worst you're going to see since the COVID lows, right? But if we can hook higher here, you got a really clean level. Then you want to look back to charts like Germany, charts like the United Kingdom, charts like Italy, big bases like Greece, right? Pick your levels, pick your spots. I don't think that all the excitement around the ex-US trade should be over because of this. I think the way to look at that is, wow, damn, how well is the rest of the world holding up despite the news flow that we're getting, despite the trade war, despite all the tariffs? Look at the price action here. I think you can look at this and spin this in a very positive way for the rest of the world. I am still far more excited about the rest of the world and the ex-US trade than I am about the US trade.
All right. We shall see. Steve, let's wrap it up. Before we do that, just kind of looking at things that, dare I say, it's somewhat quiet out there. Technology is leading the way up. Energy is leading the way down, at least in the U.S. Looking globally, Australia again. Sheesh, Australia. I know yesterday was the other day. It's South Africa too.
Yeah.
China, South Africa, Australia leading the way higher. What else do we have here? Things are kind of quiet in crypto land. Things are currency land. What's going on there? Commodities. I mean, oil is getting punished again. Gold is up.
I got one more thing.
Bonds are getting taken out back.
Gold's interesting. I'm watching this move in gold, and I'll probably play it through the blue chips. I'm over the silver miners for now. Wavy's always paying attention. He says he thinks I'm not taking into account the bond spreads. Something systemic is happening. It's strange. It's strange to see treasuries falling. What's not strange is to see the bond market freaking out and credit spreads blowing out in an environment like this. This is exactly what I would expect to see. Look, we just took out the August lows. Right? August, we remember what the S&P did in August? Broke lower, got blasted, and then V'd out of there. Right? We're just about at the August level for credit spreads. You just need to see them stabilize. Here's the problem. Here's why I think they might be a bit of a ways out from stabilizing or at least bottoming. When I look at credit spreads, I'm just looking at high yield bonds relative to treasury bonds. Okay. But you always want to ask yourself, what's behind those ratios? What's behind that relationship? Well, it's high yield bonds and it's treasuries, right? When I look at high yield bonds, this is ugly. This is gross, right? So we were calling this, textbook trend reversal, beautiful path of least resistance, now higher for high yield bonds. That's a positive, right? That's the kind of thing you want to see in a bull market, right? So high yield bonds, like a lot of lagging groups in the equities market, completed this late and prolonged base, right? Like ARC, small cap, stuff like that, and started moving higher and then failed miserably. We got this break. I have the VWAP here anchored from the Q3 2023 bottom, blasted right through it, and now we're back into the box. High yield keeps moving lower, which there's a true risk of that, being the case and moving back to the lower bounds of this range, because from failed moves, like this failed move, come fast moves, right? If that happens, credit spreads are going to keep blowing out, right? They're going to keep ticking higher, right? So to contrast that, let's look at treasuries. IEI, despite the 2 awful days in treasuries, this looks far better than the HYG. So when you're thinking the HYG IEI ratio, you got one that's getting absolutely blasted back into the box, right? And I think can have some more downside here. And then you have another one, which its treasury is not going to move as fast. It should be less volatile. So I think this HYG IEI credit spread formula that we use is probably going to keep moving lower. You don't want to see it keep moving lower with momentum, right? I think it's going to keep heading lower. That's going to tell you you're probably in a bear market, right? A prolonged bear market. I think we could find some spots. We could take some shots. We could explore some things for the long-term accounts. We could buy against key levels in the mags and the U.S. growth stuff and even internationally. But as far as trading and buying some sort of dip or swing trading out of here, you kind of need to see the bond market settle down here. So I totally agree. Wavy credit spreads are on my mind as much as anything right now.
Yeah, do you have a favorite sector right now? Or not really? There's no such thing.
Do I have a favorite sector? I like China a lot still.
That's not a sector, but okay.
I like crypto. U.S., dude, the U.S. is a landmine
it's
right
a mess.
now.
Okay, no such thing. And A is the answer.
Here's one. Here's a favorite for the road. I think there's an epic scoop and score opportunity in something like Solana here. Right, you see this chart? I know I keep talking about it. I've been out of Solana for months. I'm ready to get back in. If we scoop, this is all I need to say. Crypto continues to be super resilient. Right, we have a nice little momentum situation here. You see this, Spencer? That's called a potential bullish momentum divergence. We're not even oversold here, not confirming the top. Solana won't break. Somebody mentioned in the chat before, why is MicroStrategy holding up so well? Crypto in general is holding up so well. Look, you want to get You want to get a little freaky? How about this? Look at the Ripple. This thing was up 1,000%. One of the best assets to literally own since the election, right? Remember this move? Now this is just a little textbook top, not oversold the whole time. Ripple hasn't gotten oversold through all of this. Every stock around the world, Spencer, has been oversold, but the Ripple coin, no. The Ripple coin is holding up. It's amazing. Don't fight it, right? It's what's happening. This is a source of relative strength right now. If the market and risk assets can find their footing, look to cryptos. That's my favorite sector. It's holding up better than anything. Scoop and score possibilities and things like Ripple, Solana. I like that a lot.
All right, maybe Steve will write about that in today's Strazza letter. If you do not get the Strazza letter, sign up. It is free. The link is in the description. The link has been on the screen this whole damn time. It's a really easy URL to just copy and type. That's where he puts his thoughts. So Strazza, thanks a lot. We would do this again tomorrow morning.
Yeah.
So we'll see you there for that. Smash the like. Thanks for watching. Subscribe. Tell your friends. Do all that good stuff. And we'll see you guys, all right?
Stay safe out there, everybody. Still keep money mode.